Hello guys, it's Max here from Daily Market Movements. Welcome to another episode where today we're going to be analysing the S&P 500 followed by the Nasdaq100 and the DowJones30 futures charts on this hump day. Very big day today, in fact. We just heard from the CPI inflation report. Consensus was coming at around 3.6%. That was for the headline number, and 0.2% for the core CPI figure. And the data, as I had mentioned in my signal team prior to the announcement, actually coming a little bit stronger than expected. For the headline number, we got 3.7 versus 3.6% expected. And then, of course, for the core CPI, we had 0.3 versus 0.2% expected. So slightly higher than expected by 1 basis point. And the market hasn't actually overreacted in either direction, which is quite surprising. We actually kind of saw a knee-jerk reaction, but not just in the US indices, but also in the yield markets. Here is a 10-year bond yield currently trading at 4.276%, but we did briefly go and achieve a new yearly high here for the 10-year. And literally a few moments later, we actually saw some selling off, and I think the reason, the reason why we've undone a lot of the bearish price movements here in both the indices and the bond markets is because, going through the data, you actually start to realize that the majority of the inflation was actually caused by airplane tickets, so travel tickets, public transport, primarily being, in airplanes, and that is why we are seeing inflation come in higher than expected. We saw rentals come in cheaper than expected. We saw secondhand car prices. So it was just really the public transport sector that really caused a spike in inflation this quarter. So I think that's why the market has actually digested that news rather well. But in my own humble opinion, we still find ourselves technically trading in this 5-wave wave structure where we're now in the ABC correction phase. We've obviously had this A, B phase, and of course, anyone who studies ABC corrections, you'll know that this next leg, B to C, has to pierce below the lows of that A to B leg, which sits on at around 4,340. We achieved it back on the 18th of August. So that's what I'm kind of looking for. We're pressing now against that 50-day EMA, and I wouldn't be surprised if we did see a move lower. I think a move and a close lower below the 50-day EMA confirms the fact that we are trading in this ABC correction pattern. Of course, we're still trading above the 50-day EMA, so we still do need to see more evidence of a move lower in order for me to say, yes, this is what's going to happen. But, this is what I'm kind of projecting to happen over the next couple of days. September, historically speaking, is the weakest month of the year. Not in pre-election years, but in your average year in the stock market, September is the worst performing month. In pre-election years, it's not great either, but it is slightly better than your normal average year. But we've seen a very strong run up going into the month of September, and historically speaking, when that has occurred, September does, whether you're in a pre-election year or not, it does tend to be a little bit more weaker. So I think that this is a month just for profit taking, and there's definitely evidence of that. And then just moving over to the Nasdaq100, very similar structure to the S&P 500. We've just completed this 5-wave Elliott wave structure, and we're now in the process of forming this A, B, C correction. Very similar to the S&P 500. We find ourselves trading pretty much just above the 50-day EMA, but for confirmation, I'd like to see a move lower and a close below the 50-day EMA for us to go and break below August 18th lows, which sit at around 14,500. I think a good area to target is the 0.618 fib area of this fib chart from the peak to trough back in 2022. That's obviously going to act as an area of key support, and I think that that's an area where you could potentially put some money to work if we were to get there. And of course, we have the 200-day EMA just below that. So there's plenty of support around that 14,400 area. And I think it would be very attractive if we could trade that low, especially moving into the month of October, because I do expect the final quarter of 2023 to be very bullish for the stock market. And then last but not least, just moving over to the DowJones30. The Dow hasn't really done much this week, but when you see the Nasdaq and the S&P 500 declining slightly on the week, not doing much is actually not that bad of a thing. And we currently find ourselves trading at 34,615 here for the DowJones30. If we just zoom in a little bit closer, you'll realize that we're trading pretty much on that 50-day EMA. What I like here is that we do have plenty of support. We're still trading in this uptrend. We continue to create a series of high highs, high lows. And with that being the case, I think this is an price area where the buyers would happily step back in and send this market back up towards the swing highs here for the Dow Jones 30. Just a few other markets that you really want to be keeping an eye on. Here is the dollar currently trading just below the yearly highs pretty much. The highs that we achieved last back in March, I should say. So, the monthly highs, if we can, trade back above 105, that could potentially be worrying and that could spook the markets. And then, of course, the bond market, if we trade above 4.3, I think that's an area where, the markets would start to get spooked. And in all honesty, team, I'm not really going to be buying much in the US equity market until we break below 4.05. I think that's a very significant number. If we can break below this white bar, which is around here, there you go. So the support that we found, or the lows that we last achieved on the 1st of September, it's not really until we break below this area here that I would then become very bullish on the stock market. I think this is a danger zone here for the yields with a real good chance of breaking higher up towards new yearly highs and perhaps going up towards 4.50%. But I'm going to wrap it up there, guys, for today's video. Thank you very much for tuning in. Don't forget, if you'd like to join my free Signal team, make sure you scan this QR code on your screen. It'll take you to my website. It's completely free of charge to join for 1 month. If you don't enjoy the service, you can cancel at any time without being charged. You get a free month trial. And of course, team, this also gives you access to my daily market research group. That is also, I should mention that the research is also posted in my Signal group. So it's all in one place on a Telegram group chat. And to sign up, takes 10 seconds. All you have to do is scan that QR code. Thank you.